We continue our afternoon session of Athabasca Uranium Companies with UX Corporation. We welcome Roger Lemaitre, CEO, to speak about UX, owner of multiple exploration and development projects across the basin with 100 million pounds of resources to its credit. Roger, you have 15 minutes to speak, and then we'll have a 5-minute Q&A session at the end. Attendees, please feel free to ask questions using the Q&A link below. So go ahead, Roger.
Well, thank you very much. Appreciate being invited to the conference here. I know it's been an extraordinarily busy stretch for a lot of you here, so I appreciate your time. Learn a little bit about our company and sort of the unique angle we bring to the uranium junior space that you probably won't see in many of the others. Not only do we have an exceptional portfolio of uranium assets that are all Athabasca focused, we also dabble a little bit in the cobalt space and have Canada's only primary cobalt deposit. As you know, as most of you will be aware, that we'll be doing some forward-looking statements, so please keep this long statement in mind when we make our statements going forward. And I want to turn this around a little bit from a uranium investor perspective as opposed to a UX perspective, and where should uranium investors focus? As a uranium investor, you can invest right in from physical uranium down the ladder here to grassroots explorationists. Depending on what your risk tolerance are, the risks sort of generally go up as you go down, but the rewards also are higher as you go down. And so UEX, we give you exposure to 3 rungs on that ladder. We have development ready projects that are in our portfolio that we push when the time is right. We have the exposure to new discovery, and we have resource growth opportunities. And I don't think there's many companies out there that can expose you to all of those opportunities. It's important as an investor to have, if you have the appropriate risk tolerance to do so, to look at new discovery companies, because new discovery companies will always outperform on a share basis the market of a developer and explorer. Developers and explorers will go up and down with the price of uranium plus whatever their studies tell them are the potential returns and a risk factor tied to that. But if you look at a company, if you can pick the right company that makes a discovery, you will see whether it's an up market like we were the market darlings in the mid 2000s compared to Paladin, Hathor around the time of Fukushima, or NextGen most recently in a terribly difficult market. New discoveries will always outperform, but the challenge is finding that new discovery company. So that's, we look at ourselves as a portfolio of lower risk options. We have a large strategic and well-positioned portfolio. I mean, tomorrow, if we want to start a brand new uranium company tomorrow, we could be the largest landholder in the Athabasca Basin by the end of the day. But that's not necessarily a great land position. Since we were around 2001, we were around before most of the other players were in the space outside the majors that have been here long term in the basin, and we picked up a great portfolio of opportunities. We border up literally on 3 world-class operations. We're underpinned by just a hair under 100 million pounds resource, one of the largest of your base for uranium explorer in the basin, and that gives you protection with the uranium price and the movement with the uranium price as well. But probably our biggest strength is our ability to focus on lower risk, mid-stage, and resource growth upside potential. We also expose our shareholders to the nickel cobalt opportunities that we are pioneering in the basin. And our team has sort of been there and done that and found things that are in mine plans. Just a little bit about us. Depending where you're following us today, our market valuation started the day at $166 million, and we hit 38 cents in the middle of the day here today. Cameco is our largest shareholder, being one of our founding shareholders. And we have in our most recent wave of financing over the last 3 or so years, we have a lot more of the uranium hedge funds that have taken positions such as Sagres. But why should be interested in uranium? We've seen things coming. We're seeing a wave in the equity markets right now for junior stocks like our own. And I think we've seen false starts, so people get a little bit hesitant. But I think when you look at the dynamics of what's happening today, it's so much like 2004, 2005, but probably more than anything else, it's uranium is probably the only commodity in the world where people are expected to continue to lose money forever, and it's going to be sustainable. Right now, uranium supply is only 2/3 of demand, exacerbated by COVID. There were, of course, under Fukushima, lots of potential of inventory out there that could be soaked up. But I think what you're seeing is the end of that whole process. But probably what's most concerning more than anything else is that this is the last week's spot or a week and a half ago spot price, so I apologize. But there's very few pounds in the market today that just the cash operating costs are being covered by the current spot price. So you're looking at the world's top 12 to 15 operations here. And you go, yeah, there's a lot of space on that left side. There's really healthy looking profits. But for most of the operations, particularly the ISR operations of Kazakhstan, you can double the operating cost to consider what the annual sustaining capital cost would be. And then of course, there's capital costs on top of that. And there's not a whole lot of room there. But you exacerbate that with the fact that that Ranger and Cominac shut down this year. Now there's only 83 million pounds of 180 million pounds of demand that meets cash operating costs. But one of the strangest things about investors is they do like a return, and they want to recover their capital plus a return. There's just no one's just really making any money, and this just can't continue forever. Meanwhile, we have reactors under construction, a true growth scenario, and increasing global recognition, which has sort of gone into hyperdrive since the Biden administration come in and reaffirmed their clean air commitments, that nuclear is an important part of cleaner energy going forward, and that's in the current climate crisis. But clearly this is not sustainable in the long term, and we can go into infinite detail on that. There are, I just come and talk to us after the conference, or next week you can get a hold of us as well, and we can talk about the details of the market in infinite detail. Our competitive advantage, a lot of people will say, our location, we're in the world's #3 uranium mining investment jurisdiction, where we have the highest grade deposit in the world. It's one of the most geologically favorable as well. Our experience, our team has been there, done that, finds things that get into operations. We have a portfolio that's better than anyone out in our peer space. And we have unique knowledge, not just about how we do like a basement uranium, but also the cobalt angle. Our team, we're a small team, and not many of us out there, but we have 7 key uranium discoveries under our portfolio belt in our previous lives as well. And one of those is actually in the mining of a mine itself, and 2 are in the mine plans. So there's not just finding things, it's finding things that actually turn into economic opportunities. Plus we have the cobalt angle as well, of the first in kind cobalt discovery that this team has made. Our board of directors covers all the skills that you'd possibly want. We have continuity, we have new blood in our board, we have technical expertise, and all the accounting and governance that you possibly want. Evelyn, our CFO, has been through the ringer on the junior space and been with us for just a little over 3 years. And I have extensive experience in the uranium space, working at Cameco in my previous lives as well. But this team has been able to shepherd us through some of the most difficult times in the uranium space since the last run-up. But like I said, if there's one thing I'd like you to take away from the value that UX brings to an investor, it's probably this particular concept here. We're a unique uranium investment. And like I said before, you can look at opportunities in the development, and mostly you're looking at space in the uranium space today. You have 2 opportunities. You can invest a grassroots opportunity, or you invest in a production development story. And there's very little space in the middle. And so it kind of limits what you can do with things. Development projects will move up and down with the price of uranium, plus the technical risk. Grassroots companies, man, if you've picked the right one and they discover something, you're off to the races. Where UX shines is in the middle. While we do have an extensive grassroots portfolio, we do have 2 projects ready to move forward to development when the market signals a need for pounds. We have what we call mid-stage and resource level projects. Resource level projects where we have deposits that are not yet closed off, or we're on a deposit trend that has not yet been fully explored. Or in the mid-stage projects where we have hot holes and historical work that says, we should be looking somewhere slightly different, like there was nothing at the unconformity, but smoke tells us to go into the basement like we do at Hidden Bay. And we have dozens of these things in our portfolio that would be flagships for a lot of other companies. And what we believe that does is allow our investors exposure to that lower risk exploration upside for discoveries, but backstopped by the pounds we have in our portfolio. And this year, we're going to be focusing $4 million at 2 in the winter here, 2 in the summer at Hidden Bay, Christie, and West Bear, looking for uranium opportunities on all 3 of those projects. The beautiful part about being in Hidden Bay and West Bear is they're very shallow. $2 million there goes a long way. It's a lot of drill holes. Our focus in the short term as a company is about growing the resource base through new discoveries on those mid-stage and resource level projects, as well as growing what we think is probably one of the premier brownfields exploration opportunities in the basin at Shea Creek, within the footprint of the existing deposits. And then we do dabble in that cobalt space, and we're just waiting for the right opportunity to extract value for shareholders with our West Bear nickel assets, our cobalt nickel assets that we think should probably be separated from the main company. Long term, we'll move Horseshoe Raven ahead when the market signals a need for more uranium, and we'll look at opportunities to find acquisitions in favorable low-cost jurisdictions. So just very quickly on a Hidden Bay. Hidden Bay is the east side of the Athabasca Basin. It's 0 to 50 meters. In one little corner, it goes as deep as 200 meters to the unconformity. So we're looking at the shallow portion of the basin. We have 200 kilometers worth of previously explored trends that looked for classic Cigar Lake, McLean Lake style unconformity deposits, but didn't look for the Eagle Points and the Arrows of the world. So we have a library of opportunities to sit there and go, oh, here's a spot where we didn't find a unconformity deposit, but did we look in the basement? And we've identified 15 of those on the property. There's not too many projects that border on two world-class opportunities. On the right-hand side here is McLean Lake. You can see the pit at McLean Lake comes right to our property boundary. We have sniffs of mineralization on our side of the property boundary, and there's a great opportunity for an Eagle Point analog here that's still yet to be completely followed up. At near the Rabbit Lake deposit on the other side of our Hidden Bay property, we're going to be testing the nickel uranium sands area, an area that's literally just a couple kilometers away from a world-class deposit. Nickel uranium sands, it's a bunch of boulders that have been scraped off a uranium deposit somewhere in the vicinity by glacial ice advances. We believe that these types of opportunities have led to discoveries at the Collins Bay A, B zones, at the Rabbit Lake operation, found Key Lake, some of the Cluff Lake deposits, and more recently, Fission's Triple R deposit. Chasing these boulders back to source is really important. We know that the source of this boulder train has never been found because of this geochemistry. It is not similar to any of the deposits in the neighborhood. And we've identified a spot here where we know there's some alteration, the upper bedrock that has not yet been followed up along a graphitic fault structure. And we'll be looking for a basement deposit here. At Christie Lake, we're going to go back. We've been focusing most of our last few years at Christie Lake because we got the extension of the McArthur River fault structure, as you can see in the top right-hand corner. We have 3 deposits and counting. We're not quite at the point where we can think we have an economic size, but we've only explored about 5% of the trend. And we'll be looking to this summer, go back to our Aurora North area, north of the existing deposits where we found compelling alteration, structure, and geochemistry that tells us we're close to something. And if that doesn't pan out, we're going to start working our way back down the trend towards the McArthur River property, testing a B zone and A trends where geophysical knowledge and geological core tells us that we have similar scenario to what we're seeing at Kenpen. At Shea Creek, we're the first of the west side discoveries, right up against the world-class Cluff Lake mine operation. We have one of the largest undeveloped deposits in the basin, but we don't believe it's been closed off. And I think with modest amount of exploration effort, we can grow this into the second largest undeveloped deposit in the Athabasca Basin. I think what we're focusing on is the Kiena-style potential that is yet to be tested at the bulk of the existing 4 deposits. Kiena hosts about 50% of the resource. It's the highest grade part of the resource as well for the most part. And it hasn't been, that target hasn't been tested across most of the rest of the project. And we think we've identified 10 areas where we see the same structural scenario where an east-west fault crosses the main trend that causes the host of the Kiena deposit. We see it in 10 other spots underneath the existing deposit where not only we think the structure is there that could form another Kiena, we actually see sniffs of mineralization and alteration that says, yeah, we have to follow up on this. This is a brownfields target. And we're pretty comfortable that we can get our friends Orano, the operator on side here, that we'll get this project made and we can grow it substantially. At Horseshoe and Raven, we have a project that I like to say, if it was anywhere else in the world, it would be probably being mined today. It's lower grade than your typical Athabasca project, but it's off the edge of the basin, so it doesn't have the Athabasca curse of water. So we're and challenging freezing issues. We can heap leach this. We'll push this project when the time is right. And just to mention a little bit about our cobalt assets, we have the first unconformity cobalt nickel deposit in the world ever found. We have the secret sauce to find the next ones and the property position to do so. And in fact, our property position is exactly what you'd want to chase down if you were to reinvent this basin and say, let's look for cobalt nickel instead of uranium. What would you do first? Shallow eastern portions where there's infrastructure. We think we can find more of these. We're currently drilling holes on the edge of the West Bear Dome to find more, either uranium or cobalt, because we think we can find either or in the same targets. And we'll be seeing we'll be putting those results out here as they come in during the winter field season. And with that, I'm going to once again mention our unique mid-stage and resource level portfolio opportunities. But when you compare us to our US developer producers, US and global developers, and our peer developers, there's certainly a lot of room for us to see value appreciation on AV per resource basis. So with that, I'm going to wrap up what I'm going to say and turn it back over to Dave and see if there's any questions.
Perfect, Roger. Thank you very much. Right on time. Yeah, I have a couple questions here. The last couple of years, the focus was on nickel and cobalt. Are those projects, or that project in particular, being put on the back burner while there's sort of been a bid caught here on the uranium side? And would you consider spinning that project out or JVing it, or what's your future look like for that project?
Well, when it comes, I'll answer the last one first. We've certainly explored with a lot of groups the opportunities to find the right mix, whether it's a partner, a JV, and a spin out. And I don't think we found the right combination that we think creates value for our existing shareholders today. With the cobalt market moving as it has over since the beginning of the year, those opportunities become a little more lucrative. And the trick is we could always have pulled the trigger. It's just, what does the existing shareholder get out of that opportunity? We want to make sure they get value out of it. So we think that balance is starting to shift back in the favor of our existing shareholders, or at least more balanced. And yes, we've done work at West Bear on the cobalt nickel, but we've been doing about the same amount of work at Christie Lake. So we've been doing a little bit of both. Currently, we're drilling on the West Bear project as we speak. And our view is that since you find your cobalt deposits in the same structural and hydrothermal systems you find uranium deposits, you can go testing on West Bear and a Hidden Bay and go looking for uranium and find cobalt and vice versa. And we'll let the rocks tell us what we're going to find, if we're going to find something, as opposed to saying we're only going to look for uranium. Our focus this year is uranium for sure, but there's always a chance you're going to run into cobalt.
Okay, so the focus on uranium, that sort of takes me into the next question here. Is the nickel uranium boulder field more about uranium and less about finding another nickel cobalt deposit?
Oh, I believe so. Yes. Yeah, absolutely. I think that's there's nickel there. It's uranium nickel for a reason, because the uranium was more prevalent than the nickel. The beautiful part for us about that is there are a handful of deposits in the area. The Rabbit Lake deposit, the first deposit found in the Athabasca Basin, is about 5 kilometers to the northeast, but it had no nickel in it. So we know that uranium nickel sands couldn't have come from that deposit because there's no nickel in that deposit. Our Horseshoe Raven deposits are 2 kilometers to the southeast. It's the wrong direction for the ice movement, so you can't scrape boulders up ice, and it also has no nickel on it. So the nearest nickel deposit is about 20 kilometers away, nickel bearing deposit, and it would be a unique situation to get that density of uranium boulders in one spot and have it come from that far away. So we're pretty comfortable that we're looking at it from a cobalt perspective, not a nickel perspective.
Sure. Okay. Thank you.
But doesn't mean we won't find cobalt nickel.
For sure. Those northeast trending structures at Shea Creek, is that a new take on geology? And what does that say about potential at Shea Creek? And then do you see Orano's interest in developing that project return?
So on the Orano interest, I think that they've had some management changes over there in Canada, and the current VP exploration is actually was the project geologist at Shea Creek. So I think there's an interest. The question is there short-term capacity to do so with their financial constraints, with the McLean Lake operation being toll milling being slowed down due to Cigar Lake shutdowns. The east-west structure is certainly not a new thing. That's been known since the discovery of Kiena. I think the question is, was the Kiena learnings applied elsewhere? And the first sniff of the applying was 58B, which was also beginnings of a basement discovery. And then the project, we had the global financial crisis, and then Fukushima happened, and that project got put on the back burner. So I don't think we're reinventing the wheel. I think we're just highlighting I think what wasn't known was how much more information we actually had about the prospectivity of those, because there are some holes that have hit into those trends, and I don't think that was recognized.
Okay, perfect. Well, yep. No,
Yep.
Thank you very much, Roger. So we're out of time today, so I appreciate you spending time and explaining UX to our audience. Up next, everyone, we have Standard Uranium. Thank you for joining us.